Interest rates are on the rise. Biden's favorite economist says that a recession is likely to happen, and what is going to happen in the housing market because housing prices are still going up. According to Fannie Mae and Freddie Mac, home sales are slowing down. So, what are we going to see as we move forward in 2022? Will we hit a buyer's market or will this crazy seller's market continue? And we're going to answer these questions starting right now. Hello and welcome to this edition of Ask the Lender. My name is Rod Ferrier. I am a licensed loan originator and also I love talking about what's going on in the housing market. So if you or someone you know are in the market to purchase or sell a home, you're going to want to tune in to this conversation. I am bringing in my good friend and the local authority on real estate investing, and she's also a real estate agent, Jamie Cook, and we're going to dive into the topics of recession, interest rates, housing prices, and what you can expect moving forward. And a full disclaimer, guys, I am not a financial advisor. I do not have a crystal ball. Myself and Jamie are just your average, everyday, hardworking people trying to provide for our families and help you invest in real estate and get a deal. So do your own homework, do your own research. We are just sharing our thoughts and our opinions. Jamie, thank you so much for taking time to have this conversation. I appreciate you taking time out of your busy schedule to discuss the housing market. So before we dive into all the content that we have lined up, I just want a quick, tell me a little bit about what you are seeing right now in the housing market. Are there still bidding wars, things slowing down? What are you seeing?
You know, it's funny. I just in the last week, the outer laying counties that are not, like right in DC and right in Northern Virginia. We're talking about the outer layers, like Fauquier County, Warren County. You're actually seeing a higher days on market, which means the slowdown is happening. It is starting, and eventually it will catch up into the inner cities, right? I actually had a property on the market. I put it on the market last Friday, and we didn't have any showings until Easter Sunday. And I'm like, what is going on? Like, it's priced right. It wasn't overpriced. It's in Alexandria, for God's sake. Like, AOL, Microsoft, all of them are there. So what is the problem? And I thought, something's going on. So we had a few showings on Easter, then on Monday, and by Tuesday I had an offer. And I thought, oh no, this is not right. Although it was a overpriced offer, I only had one offer, which is something that is not being seen right now. So it kind of scared me. I thought, what did I do something wrong? But honestly, I think, Easter weekend with the, holiday had something to do with it. But also it is starting to slow down. And so you'll actually see the higher priced homes sitting a little bit longer. Not that they're not going to sell, but you're going to have higher days on market.
President Biden's favorite economist says that the odds of a recession are 35%. Now, I've read that Bank of America, Wells Fargo, and other big banks are saying that that's well above 50%. And let's face it, we are in a midterm election year. I don't think that the politicians are going to throw the doom and gloom out on TV right now and throw themselves under a bus. But if you are alive and breathing and you go to the store, you go to the gas station, you pay an electric bill, if you're spending money on anything, you see that the prices are going up. And it says, although many economists and financial experts, started the year forecasting that 2022 would be the year that the U.S. put supply chain issues in the rearview mirror. Ha, ha, ha. It is so hard to get anything now. And what's going on in Russia and Ukraine is affecting the global supply chain. Farmers are struggling to get fertilizer. The cost of food is about to go through the roof. Ukraine is the largest exporter of wheat. Russia is the largest exporter of natural gas and nitrogen. So wheat And all the materials to make fertilizer, what's feeding the animals and what's feeding the field are going to be more expensive. How do we know that we are starting a recession? And one of the biggest indicators of a recession is the 2-year and the 10-year treasury bonds. So why that is important is, imagine you're putting money into a savings account and you want to earn interest on that money. You would think that if you put that money in for 10 years, you would earn more money. But what's happening right now is the 2-year treasury bond was paying more than the 10-year. And this has been an indicator of a recession for the last 70 years. The Federal Reserve is talking about raising the the federal funds rate 0.5% in each of the next 6 meetings. And the markets are already seeming to price that in. We've had 3 rate increases just this week. What you are seeing right here on the screen is the red, the negative 34. This is the bond yields, and when the interest rates earned on the bonds that I just mentioned, these 2 and these 10-year, the 3 and the 5, the 7, when those begin to pay less money, you are seeing, as this declines, mortgage interest rates are going up. Let's talk about what happens to the housing market during a recession. Generally speaking, I think most people have a fear, and I did as well until I saw this graph that, historically speaking, these dark lines right here, these are recession periods that we've had. And as you can see, home values have maintained a growth all through recessions, except for the one that we had in 2008, 2010, when the housing market tanked and then we had a drop. Now, the cause of that was related to the mortgage market. There were people who were not qualified to buy homes. We had the stated income, stated assets, basically meaning if you fogged up a mirror, the loan officer put down. We actually had a chart, a website that you could go search a job title, and it gave you an amount that on average that person with that job title would earn. And that's how crazy it was. You could be a manager at a McDonald's and buy a $500,000 home, interest only on a 40-year, negative AM loan. Well, that's kind of what happened here. Housing prices plummeted. And plummeted and plummeted and plummeted. And it took, as you can see, years, about 5 years, 6 years, for those prices, for those values to come back. I bought a house in 2006 at the peak of the housing market. And within a year, the $325,000 home that I purchased right about here plummeted all the way down to $185,000. In 2014, that same $325,000 dollar home that plummeted to $185,000 in 2014 was only worth $252,000. And even today in 2022, it's only worth $389,000. So that was a big drop in equity. But the good news is we've considered to see it go even in 2020, right during COVID, when we briefly hit a recessionary period. So if you are looking to purchase a home as a primary residence or invest in real estate, the good news is, historically speaking, home values have performed well during a recession. So, Jamie, what are you seeing right now in the housing market? You just shared just a second ago that you see homes that are staying on the market a little bit longer. Are you seeing prices stabilize, or are there still bidding wars? What do you see?
Yeah, I mean, look, in the inner cities, there are still bidding wars in areas where,
When you say
people
inner
are
cities,
moving
what does that
into.
mean?
The cities. The cities is the bigger cities like Fairfax and DC, Arlington, you're still seeing all that, right? But what you will also see is a slowdown in the offers, the time that it takes, a house to sell. when you have 0 days on market, that is not good. Eventually, it is going to catch up with you, right? And so I remember back in 2008 through 10, where the sellers were offering a brand new car with the purchase of their home. That's how crazy it was back then, right? Well, I keep telling my buyers, look, you have to make these offers look really good to the sellers. What is going to make you stand out above everybody else? And I'm almost at the point where, hey, offer them a car, a brand new car, because, you can only, waive appraisal so much, waive home inspections. If you've got 10 offers and they're all the same, how do you pick?
Right.
How do you pick?
Right.
So those are still happening, but you're also seeing like prices level out a little bit. The
And
offers are not as high as they used to be,
right.
as they were just a couple of months ago. They're not going $100,000 over. They're only doing 50,000 now, or there's only 5 offers instead of 10. So you are starting to see a flux, at least here locally.
And I mean that ties into what we're seeing in I'm reading about nationally that existing home sales slipped 2.7% in March, and this was from April of 2022. This is from the National Association of Realtors. That says existing home sales fell for the second straight month in March to a seasonally adjusted annual rate of 5.77 million. Sales were down 2.7% from the prior month and 4.5% from a year ago. Now, this is in March. I think we are going to see these numbers change drastically for the month of April that we are in right
Yeah.
now because we've seen gas prices go up, food prices go up, interest rates. That's the big thing. March is when it kind of caught on. January rates started to go up. February rates went up. We felt it in March, but we've had a 2% increase in rates in the last month. So this 2.7% that we're seeing now, I think, is going to be much higher. And it says existing home sales decreased in March, marking 2 consecutive months of decline, according to the National Association of Realtors. Sales in March waned in 3 of the 4 major U.S. regions. So as we see these, and I'm seeing this myself, with mortgage applications and reading mortgage applications data, that loan applications are down. So, we're seeing this trend continue. Now, we just mentioned a recession and that home values tend to do well during a recession. However, we have not had this event in our lifetime where you see a global pandemic, world economy shutting down, global supply chain shortages, everything. I mean, we had some of that in '70s with gas stuff and everything and oil embargoes, but not a global pandemic where the whole world shuts down. So it's going to be interesting to see what happens as we move into February. I mean, as we move into April, through April, May, June, July. What is the second half of this year going to look like? What are your thoughts, Jamie? If we're seeing mortgage applications slow down, if Fannie Mae and Freddie Mac are saying that there's that there are decreases. Me being in the mortgage business, one of the ways that I know things are slowing down is our employers, the lenders, start talking about mortgage programs, loan programs, different loan programs,
Yeah.
construction, rehab loans, finding a way to get someone in a home, trying to be ahead of the curve and be creative because I personally think, and I'll get your opinion, Jamie. What do you think is going to happen with the housing market? Are we going to see the shortage of inventory, or do you think we're going to see an increase in homes for sale as we move, into the second part and into the end of 2022? What's your take?
Well, so I will tell you right now, even though things are starting to level off a little bit, I am still seeing a lot of people holding on to their homes because they're like, well, if I can't find anywhere to live, I can't sell. So unless they're forced to sell, they're not selling. Like they don't want to, and I'll tell you, I'm doing a lot of off market stuff because if I need to find my clients a home that's not existing on the market, I'll start doing some, marketing and targeting where they want to be. And that's how I'm finding my homes to, sell to my buyers. So I'm not selling them houses that are out there on the market because they're having to compete. And I don't want to have to go through that. I see the year, kind of leveling out, and you'll see more and more homes on the market. You'll also see longer times that they sit because I will tell you the sellers are the last to understand that the tides have turned and now it is becoming a um, a buyer's market. So,
I think you're right.
the sellers are always the last to know.
Yes, and you're going to get the fear of missing out, the FOMO people, whether it's the buyers or the sellers. And I have friends and clients right now that, hey, Rod, I think I'm going to sell my home and just find a place to rent for a year or so because they don't
Yes.
want to miss out on, getting top dollar for their home, which,
Yep.
I
Yep.
really can't blame them. Something that I found interesting, let me pull this article up and in this data, with what we're seeing now, this is from Zero Hedge, which has some good content, and they also talk about the U.S. home sale slump and falling that we just read about the Freddie Mac data. But check this out. All cash sales accounted for 28% of transactions in March. One
Yes.
third of the purchase transactions, and this is up from 25% recorded in February and 23% in March of 2021. Now, why is that, you ask? Why? Well, mortgage rates are starting to go through the roof. I've seen
Yep.
two increases just this, three increases just this week alone. So total
Hmm.
housing inventory at the end of March totaled 950,000 units, and that was up, almost 12%, 11.8% from February. However, it was down 9.5% from 1 year ago. So people are starting to come off of the fence, starting to sell their homes. But the problem is with mortgage interest rates, climbing higher and higher, fewer and fewer people are able to qualify. I think, close to a third of my pipeline has been wiped out because we've gone from a 2.875, 3% rate into the mid fives. And let's just show the audience, Jamie, what that looks like. When you have a mortgage
Yeah, it's a big difference.
payment, and let's just do the math for people. Let me share the screen and we'll come over and just say if you're going to buy an average home, and I'll just do 400,000. 400,000, not 40,000. 400,000. And if you were buying this and I was pre-qualing a client today, not pre-qualing, he wanted to update his pre-qual letter because he's finally going to be trying to buy a home. This was from September of last year. He was at 2.875 and
Oh,
now
yeah.
he's wanting to buy. So let's just go back to September of last year at 2.875, and you'll see that this monthly payment is $1,659. Now, I'm
Yep.
going to cheat. I'm going to open up a new tab. We're just going to go do this calculation all over again. But instead of 2.875, let's do the same $400,000 purchase. And now I'm going to put this at 5.5. Okay. So $2,271. All right.
Yep.
That's what you're going to be paying today. $2,271 versus $1,659. You are looking at almost a $600 increase in your monthly mortgage payment for the
Isn't that
same home.
crazy?
And
That is
and
so crazy.
it's and so many buyers are getting priced out of the market. So back to that conversation we were having about the purchases in March, a third of them being cash. That's why. Now,
Yeah.
what I wish it would have shared is how many of those purchases were investment versus primary resident. That would have been helpful, to know.
Well, it's really funny. What a lot of people don't remember, and I happened to be a realtor at the same time back in 2008 through 10, really. The houses that were going on the market, and they dumped them, like the banks just dumped these properties. They were foreclosing on everything that was 3 and 4 months behind on their payments. And people were, as soon as they stopped paying their payments, people would stuff rags in the sink and turn the water on and walk out the door. They were mad at the bank. They were mad at everybody, and they just left. And so all the houses that these, banks were putting back on the market were destroyed. I mean, just destroyed. You couldn't even get a loan at the time to buy and fix your own home. If it didn't have carpet, if it didn't have appliances, I mean, there was a lot of different things. And so at the time, the only people that could buy was investors. And that's why there were so many investors flipping back then. I was doing the same thing. I was buying them at auction where the people were walking away from them. I was buying them and flipping them and then putting them back out there. And I will tell you, every month there was something new that the banks would change because, I think they realized that all the investors were making all the money and the banks were losing all theirs. And so, with banks and cash, back then it was the investors were doing good. But now a normal person can't even go buy a home because an investor's coming in with cash.
Yeah, exactly. Exactly. And, how long is that going to last? I really don't, personally, I don't think much longer. And here's why.
Yeah.
Here's what I want to, here's my thought as to
I'm
why
even
that may
telling some of
change.
my
Look,
clients,
the median existing home price for all housing types in March was 375,300. Now that's a 15% increase from March of 2021. And you see this graph and how it shot up from here we are in May of 2021, March right here, and now where we are at 375. The problem with this, and it says, that this marks 121 consecutive months of year-over-year increases, the longest running streak on record. It's basic science. What goes up must come down. And I think
yeah,
that we are going to see with rising interest rates going up, we are approaching 5.5% and we're going to share some more about that in just a second. But as you see these interest rates increase, fewer and fewer people are able to buy because of the cost of living. If you have a $600 increase in your mortgage payment, plus your gas bill, your driving work, your food prices are continuing to go up, that's got to stop. It can't continue. So when will this shift take place? My thought is by the time we get through Q2 of 2022 and coming into Q3 of this year, as we get through, summer, coming into fall, you're going to see, and you just alluded to this, you're seeing homes start to set on the market a little bit longer in outlying areas of metro areas. If you're in the Northern Virginia region, okay, so, if you go an hour and a half, if you go out to, to Winchester, you go out to where you are in Colonial Beach and these outlying counties of metro areas, you're going to see, you're already seeing homes start to set on the market for a week,
absolutely.
2 weeks, 3 weeks. That's going to, as you said, spill back into the metro areas, and then sellers are going to start having to decrease their sales price. Now,
Yes.
what are your thoughts? Are we going to see a major 40-50% decrease in values like we saw back
No,
in 2008? What do you think?
It's so funny because I bought my first house when I was 18 years old. It was 10% interest. And that was good back then because a lot of people were paying 18 and 19%. And some of them even went up in the 20s. Like, could you imagine you're paying 20% on your mortgage. And then they dropped down to 10%. That's when I bought. And I was so stupid, I didn't know. I kept my mortgage for 9 years before I realized that you could refinance. And I'm like, what do you mean I could get? Are you kidding me? Like, how crazy is that? So I refinanced and it was 6.5%. And I was, saving hundreds of dollars. And so, between 6 and really 4.5% has been the norm for, years. And so when it went down to 2%, I'm like, oh my God, this is never, like, you just don't see those kind of numbers unless you're buying down your rate. And then at some point, it doesn't make sense because the banks can't sell their loans if the mortgages are, the rates are too low, right? And so, we have been in a very unique situation to see anything under 3% ever. And so now people are freaking out that it's going back to normal. And they're saying it's, the sky's falling. And it really is not. It really is not, people. I just want you to know it's just leveling out. That's
Yeah, it's
all it's
coming back
doing.
to normal. It's coming back and I hear so many, whether they're real estate agents, potential buyers, people trying to sell their home, people are just fed up with this. And,
Yeah.
I'm happy to see things kind of begin to normalize. Let's talk about, back on the interest rate conversation for a second. Regarding interest rates, and here's an article from Mortgage News Daily. It says mortgage rates are even higher than you've been told. Thursday, this is from today, April 21st. Thursday marks the weekly release of the industry's most widely cited mortgage rate survey. All manner of news outlets rely on this survey to generate their once a week stories. Now, and again, negative news sells. That's how all the TV stations. But the only problem with that news in this case is the fact that it's no longer accurate. Due to methodology of the survey, by the time the numbers are released today, this morning, things may have already changed. So the 30-year fixed rate that they're saying at 5.11% that was yesterday, due to the rate increases today, is now 5.375. We've already
Yeah.
increased almost 1/4% in the last 2 days. So when this survey was done, this was earlier this week. We've already had 1/4% rate increase this week alone. And as these
Mm-hmm.
hikes, like I said earlier, we've had a 2% increase in the last month, and that's just insane. I'm sorry, we've had a 2% increase in the last 3 months. That's ridiculous. I've never seen that. And I've been in this business for 20 years, having a 2%
Yeah.
increase in that short amount of time. Now, the caveat to that is home prices, because of the lack of supply, are still increasing at the same time. There comes a time when this crosses where we are right now, it's going to start tapering off. So as we were
Yes.
saying earlier, rising interest rates, rising inflation, because the Fed is so far behind that curve. Fed chairmen in St. Louis are saying that they want to see the Fed funds rate to be 3% by the end of this year. Guys, we are only at 1/4% now. Okay,
Yes.
they want to raise almost an additional 3% in the next six meeting, increase from 3/4 to 0.5%. And if we are approaching 6% rates now, my call, people thought I was crazy in December when I predicted that we were going to see 6% interest rates by the end of 2022. Guys, we
Yeah.
are in April and we're already there. So,
Yeah.
do we hit 10%, as you mentioned earlier, by the end of this year? I don't think so. I think the Fed is going to be. What people don't understand is that when the Fed raises the Fed funds rate to fight inflation, it actually helps mortgage interest rates. Mortgage interest rates, the bond market likes that because people are able to save money. That Fed funds rate is the savings rate, and it encourages people to stop spending and to start saving. So mortgage interest rates like that, but the Fed is so far behind that, and lenders are pricing all of that into it. I think personally we could probably see sevens, maybe even 7.5. But as we shared earlier, we are hitting a recession. All the indicators are pointing to recession. And when that happens, coming into 2023, I think that the Fed is going to have to start cutting the Fed funds rate. And I
Yeah.
personally think that they want to tank the economy. They want the markets to crash. That way they can stabilize things, make it back to common sense home ownership, and things will kind of come back to normal. What are your thoughts?
Yeah, I mean, look, not everybody should own a home. I mean, there are people that just don't get it. I've seen them use their home as a cash cow, you know, constantly refinancing, taking money out, getting into debt. I mean, there are just some people that should not own a home because they don't take care of, what they're supposed to be taking care of. Honestly, I think it's going to squeeze some of the people out. We do need renters. We need renters for our, properties
Investment
that we're
properties,
renting
right?
out. So, I have an apartment building. I have a couple of apartment buildings. If I don't have renters, then, it doesn't help me.
Right.
So, it's a way of like scraping the bad stuff off the top, You just scrape that off and then you got pure good, jello right up underneath. I think that we're going to see higher interest rates, but I will also say that now is a good time to start looking for those subject to properties. Those are going to be at some really good rates. The people that have, bought their house in the last 5 years have really good interest rates. Well, when they start defaulting because our inflation is so high, I can step in and take over, and I've
Hmm.
got a really good rate. I don't have to go
Exactly.
to the bank and get, so for investors, this is a really crazy time because this is where I get really creative and I start working with, the people that have bought back in the day when their rates were so low and their payments are so low, and they have to do something, right? Also, back in the day, you could assume loans. You could assume an FHA or a VA loan. So, it doesn't help, lenders, but there still are ways to get a good rate. As long as you qualify, you can assume loans.
Hmm.
I
Yeah,
don't like
I've
to
had this
assume loans. I
conversation
think that
today
they can do.
with a past client and a realtor, about her VA loan, being able to assume that VA loan. You can assume it as long as you qualify on VA guidelines. You don't have to be a
Yes.
veteran. You don't have to be VA eligible. You can still assume that
Yeah.
as long as you qualify per guidelines. So that's a good
Yes.
point. So as we see home prices start to stabilize, interest rates continue to go up, the cost of everything is still going up. More and more people are going to be falling behind on the mortgage payments. So if you or someone you know are looking to invest in real estate, stay tuned to this channel. This is what we are here to help you do. Jamie, before we close out, are there any parting words of wisdom that you would like to share?
Just keep your eyes open. Just keep your ears and your eyes open. This is the change. I am turning colors. I am a chameleon. And that is what you need to do in this business. You need to learn to adapt. And things are changing rapidly. So you need to keep your eyes open. Don't stick your head in the sand. Just keep watching what happens.
If you have found this information helpful, do me a big favor and click that subscribe button right there, as well as that bell to get notified when I post more helpful content like this.